Hi everyone, good morning. My name's David Thorne, and on behalf of Banjo Loans and Hall Chadwick, I'd like to welcome you to today's webinar. As most of you know, Banjo has a major focus on relationships, particularly with its referral partners. That's you guys, the brokers, the advisors, the accountants out there who support SME borrowers that are the backbone of Australia's economy. So to all of our referral partners and SME borrowers out there, thank you. Thank you for your business. We hope you'll find today's webinar useful and insightful. Our first presenter this morning is Brendan Widdowson, Banjo's National Head of Sales, who's going to be sharing some insights with us on business flows across different industry sectors, as well as some key themes emerging from the last 12 months or so, and what to expect as we break out of lockdown. We're really pleased to be partnering with Hall Chadwick as well, which is one of Australia's largest and most experienced accounting groups that's been operating for over 130 years. Robert Lissauer is our second presenter today. Robert's a director, chartered accountant and business advisor with Hall Chadwick's Melbourne office. He's been supporting foreign and Australian companies with their inbound and outbound growth plans for decades. Robert also serves on the board of Prime Global as an Asia Pacific director, and he's going to be speaking with us today about some of the recent trends in cross-border trade and investment activity that Hall Chadwick is seeing. He'll also touch on the impacts which those trends are having on Australian and international companies and their ability to grow in their chosen markets. We've scheduled for today's webinar to take no more than an hour, and there'll be some time for Q&A at the end. So please feel free to send through some questions that you may have during Brendan and Robert's presentations. We'll try to answer as many of them as we can in the last 15 to 20 minutes. Just click on the Q&A box in the top right-hand corner of your screen if you have any questions, of course. I should also mention that a copy of this webinar and the related presentations from Brendan and Robert will be available later today. So without further ado, I'll hand over to Brendan to kick off his part of the webinar. Thanks very much, and over to you, Brendan.
Just bring up the slides there. Have you got those, David?
I have, thanks.
Great, thank you very much for the introduction, David, and thank you to everyone for joining this morning. I'm delighted to be able to present this morning. Obviously, my name's Brendan Widdowson. I'm the head of sales at Banjo. I'm also delighted to have Robert and the Hall Chadwick team involved here. As David mentioned, we value our relationships or our partnerships extremely highly at Banjo. It's great to be able to provide some insights. Obviously, the title today is Navigating the Current Impacts on International Trade and Investment for Australian SMEs. So in my presentation, I'm just going to try and set the scene a little bit, provide a bit of an overview of what's happening from an international trade perspective, and then bring that into more of a focus on the SME landscape and what that means for Australian SMEs. So diving straight in, as I mentioned, I'm going to start with a bit of an international trade overview and looking at things at a really macro level. Australia's international trade volumes have grown significantly in 2021. Exports have reached more than 41 billion per month, up from lows of circa 28 billion in August 2020 following the pandemic. Imports are getting close to 30 billion per month from lows of circa 23 billion in May 2020. This is obviously resulting in a trade surplus of approximately $12 billion for Australian business or for the Australian economy, which puts us in a pretty strong position. And I guess at a high level, at a macro level, things are really looking positive. Unpacking that a little bit and going into the underlying growth in exports, we can see, on the left-hand side there, as we know, Australia relies really heavily on our resources sector, and the growth in exports has been driven largely by iron ore. So the export volumes in iron ore have increased, and you can see on the table on the right there, pre-COVID from 10.1 billion to 19 billion in July 2021. I think we know iron ore prices are driving that growth significantly, and with prices coming off in the last sort of month or so from a high of $237 per tonne in May 21 to just 133 per tonne as China cuts its steel production, and with a ramp up of global supply. It's going to be interesting to see what ultimately happens to these numbers. But from an export perspective, I think the other commodities are interesting to see there as well. They're again similar to kind of pre-COVID levels. The rural sector is an interesting one with beef and wheat being the primary producers there, and there's actually been an uptick there despite some of the geopolitical things that are going on with China, which I'm sure Robert will get into in some more detail. Just finally, obviously, services remain impacted with things like travel and tourism still really restricted. From an imports perspective, consumption, capital, and intermediate goods are all now above pre-COVID levels, but intermediate goods seem to be driving a lot of the growth there, which is interesting given the restrictions on imports at the moment, and the availability of imports, and how that's sort of causing prices to increase and creep up, which is again probably having an impact on the growth there, and whether or not that's sustainable, only time will tell. And again, services, I think, severely impacted here, with imports down, services imports down still 50% since pre-pandemic levels. So with that not expected, I guess, to change in the immediate future. Here's a big one you can see on the left-hand side chart there. Personal travel just is the #1 import for Australia's economy. So I think that the underlying pieces there of from an export and import perspective are going to be interesting to see as things evolve, despite the overall picture looking pretty positive. I guess the final slide on the trade piece, I think just the fact China plays such a huge role as our major trading partner. They make up close to 29% share. This is from the latest DFAT statistics from a 2021 report. Our two-way trade is valued at just over 250 billion. It's actually up from 235 billion in the previous financial year. So again, despite some of the geopolitical things we're seeing with China, there's actually been growth there in the trade. And the United States is our second largest trading partner there, which has moved up into second place, but still only makes up 9% compared to the 29% of China, which I think is some really interesting context to have, and it's interesting to see what's happening in the Chinese market at the moment and what impact that might have on trade volumes. So what does all this mean for Australian SMEs? I'm going to dive into some of the information from our recent Banjo SME Compass report, which surveyed hundreds of Australian SMEs and looked at what the impact, I suppose, that COVID has had on those businesses and where they're trying to find growth at the moment and still trying to, I guess, find opportunities. So unsurprisingly, 72% of SMEs had their operating capabilities restricted as a result of the pandemic. And the majority of SMEs didn't meet their 2020 revenue targets, I guess, which again is no surprise. What is interesting, close to 1 in 3 actually had to decrease headcount as a result of the pandemic. And there's a few other responses there that the business took to try and adjust and evolve, I guess, to maintain their growth. So moving online was a big one, launching new products to market, investing in technology and increasing marketing spend were some of the tactics that businesses were making to try and maintain that growth or stay ahead of kind of the market. And leading on from that, the largest barriers to growth for businesses, unsurprisingly, economic and market conditions made up a big one. Recruitment challenges was also mentioned as a top 5 barrier, and anyone that's tried to recruit of late will know how difficult it is to find top talent. Competitor activity was up there, and then access to funding and insufficient cash flow are two that we consistently hear from SME business owners, that they need the access to funding there to maintain, I suppose, their growth trajectory and the cash flow to support their growth is a consistent issue for business owners that keep them up at night. And leading on from that, this is actually a couple of graphs or charts from the most recent NAB SME quarterly survey. The top chart on the right there shows the constraints for SME output as it relates to sales and orders, then the availability of labour. And you can see that the black line there, the availability of suitable labour, as I guess we called out already, has grown significantly, and that's actually, according to this survey, the biggest challenge that SMEs face. But then moving down the line to chart, the bottom chart there, you can see the red line looks at premises and plant, which is fairly consistent, and then the availability of materials. Actually, with the survey, that for the first time, materials availability is a bigger issue than sales and orders for SMEs, which is quite astonishing to think. The fact that the availability of materials is holding business back is interesting. But I guess we're seeing it in supply chains across the board. And anecdotally heard, there's something like 3,000 Woolworths employees impacted at the moment across their outlets and their stores and their distribution centres, which I think is no surprise to anyone. And things like the Australia Post and delays there are causing big constraints on businesses. Likewise, it's actually increasing the cost of inputs. So raw materials, as we know, anyone trying to source timber for projects know that that's a huge challenge as well. And you can see in this chart, all three of purchase costs, labour costs and overheads for businesses have dramatically increased in the last few months. And ultimately, that's driving higher final prices for SMEs and the prices that they're needing to charge clients. That being said, whilst prices and costs are increasing, margins for businesses are remaining relatively flat. And ultimately, the increase in input cost is puts a strain on cash flow for SMEs because they've got to outlay more upfront and have the cash there to buy those raw inputs to get the same output, given that margins are remaining consistent. So despite all of the challenges that a lot of SMEs are facing, as we've just mentioned, optimism remains high, with SMEs feeling positive about the future. From our Banjo SME Compass, 81% of businesses felt confident about the long-term future of their business, and 69% expected an increase in revenue over the next 12 months. Likewise, the NAB quarterly survey shows that SME conditions and confidence are at all-time highs. I guess this demonstrates that the support has been there for businesses through both government stimulus and JobKeeper, JobSeeker, and the cash flow boost, but also businesses have been able to evolve and adapt to the new conditions. So some of the things that we were talking about earlier, businesses are evolving and tapping into new markets, which is giving them greater confidence. Following on from that, now we're going to look at, I guess, what businesses are doing to drive growth in 2021 and beyond. So as confidence returns, so does the intended investment in product improvement and marketing. You can see there significantly improving existing products, purchasing new assets and equipment, increasing marketing spend, investing in new technology. It's really come through in our Banjo SME Compass, and that lines up really closely with what the NAB survey is showing as well. So things like developing websites and new products and online marketing is really coming through strongly. And that, I guess, moving into 21, the survey also found that 52% of businesses intended to increase the proportion of revenue that they plan to generate online. Surprisingly, 14% of those surveyed said that 2021 would be the first year that they begin generating revenue online, which I think is pretty astounding. But the shift is happening, and there's a lot more activity happening online. I think the last quote there is a really nice one from one of the businesses that was surveyed. People are more used to doing business online now, and they think it will stay that way. So I think we're going to see more and more of that, and obviously with businesses selling online, there's flow-on impacts to supply chains and the availability of goods and making sure that things are efficient there. Looking at geographic expansion, another interesting one, despite having quite a significantly smaller SME footprint than Victoria, Queensland is seen as equally desirable now as for expansion for SME business owners, which I think gives the Queensland market a pretty significant opportunity, especially whilst as we know, they're still in a state at the moment where they don't have the restrictions like New South Wales and Victoria. So we think that's a trend that will continue to occur, and businesses looking at further north in Queensland as an area to expand in. Another interesting stat that came through, and I think Robert will touch on some of the M&A activity that Paul Chadwick has seen, but growth through acquisition is on the cards for 42% of the businesses that were surveyed. And they're seeing that as an opportunity to increase financial performance, product offerings, and their geographic footprint principally. So there's a lot of, from a funding perspective as well at Banjo, we've been seeing a lot of activity in the M&A space, and I guess a lot of business owners are seeing an opportunity at the moment to I guess pick up other businesses at a discount and use the current environment to continue driving their growth via acquisitions. And interestingly, these businesses that are looking to acquire are turning principally to business advisors and accountants for their external advice. So I think the accounting sector specifically, the role has really evolved for the accountant, accountant, rather than just focusing primarily on the traditional compliance work and tax returns. Accountants are being required to play more of an advisory role for SMEs. So looking to just the final section here is, I guess, how are SMEs looking to fund this growth that they're planning on achieving now? And there's some interesting statistics that came through here as well. In the next 12 months, 65% of SMEs intend to leverage funding to drive their growth. And SMEs now are turning to a variety of different sources for raising the funding. No longer is the banks the only source of funding for businesses. They're turning to private equity, venture capital, private investors, family offices. I know there's a lot of activity going on in that space as well, and then alternative lenders like Banjo are there to support as well. And it's good to see that founders intend to invest more heavily in further or in their businesses as well as part of that funding that growth journey. When sourcing funding, some of the things that are coming through from an importance perspective, interest rate. We know we're in a really low rate environment, so businesses are keen to get the lowest rate possible for the type of funding that they're sourcing. Ease of application is another really important consideration, which kind of lines up with, I suppose, the speed of obtaining funds. And the other standout there was the length of loan. So being able to obtain, I suppose, the type of funding that lines up with the actual need for the business. And there is a lot more sources as we set out there for businesses and different types of funding that they can tap into. So I think brokers also, accountants, play a really big role in this piece and making the process, the application process, and the speed for businesses to obtain funds really smooth and as quick as possible. So again, 59% of SMEs said they experienced challenges when looking to secure funding. So I think this lines up with some of the statistics on the previous slide around what's important. But you know, it's the top issues here are requirements of the lender are too strict. The time taken to obtain a decision is too long, and a business is required to provide property or personal assets as security. So again, I think that you know, brokers and accountants have a really critical role to play in helping support this process. And I think that, you know, lenders like Banjo out in the market as well are trying to make this, you know, combat some of these issues here as well in making it, you know, really easy through online application processes for businesses to obtain funding, but also not requiring businesses to put up personal assets as or property as security, and providing, you know, unsecured working capital or cash flow lending based on the business's performance. And consistently with the slide earlier, businesses are turning to their accountants, they're turning to brokers to support with assisting or assistance when securing funding. So those many of you on the call I know will be from the broking sector or the accounting sector, and I think, you know, the role that you have to play in supporting businesses as they look to growth again, and, you know, I guess trade their way out of some of the restrictions that they've been impacted by from the pandemic can't be understated, and there's a critical piece to play. So hopefully that gives some high-level context. I believe now I might hand over to you quickly, David, and I will bring up the slide.
Thanks, Brendan. Really appreciate that. Some useful insights, and we might just flip over to Robert's presentation, which Brendan's going to take control of. And yeah, we'd like to welcome Rob Lissauer to present his slides very shortly. Thanks for joining us, Rob.
That's a pleasure, and thank you for having us, David and Brendan. I appreciate the opportunity. Brendan, those slides, yep, there they are. There, we may as well go straight onto the next one. That's the headline one. Okay. What we're gonna, you know, clearly everyone is aware of what the primary topic is today, and for my area is the impact on international trade. That's one of the sectors that I'm heavily involved with at Hall Chadwick. So the segue is leading on from what Brendan said of, you know, beyond 2021, what can we expect? If I would have been here, if I would have gone back 12 months ago to September, and I would have thought where we're going to be in 2021 as opposed to beyond 2021, I don't think anyone would have had that answer. Or had envisaged quite as it is. So what that shows is really we're living in such dynamic times in the 2020s that we've got to be able to adapt and to move quickly, and all of us have had to learn from that quite significantly, and definitely from our clients that's what we've seen. So from our perspective, just to further on from what some of the things that Brendan has already mentioned, and I'm going to leave aside the aspect of certain industry groups or sectors that have been unfortunately hit or ravaged by the pandemic and various other things, travel, hospitality and so forth. We understand that they are in a specific band, even certain aspects of retail, depending on the states you're in, etc. But broadly speaking, what we're seeing from an inbound and an outbound business perspective is that things are, you know, quite good. Okay, so backed up by what Brendan has said is what the economists are saying around us, that things are actually, yes, there's some clear headwinds there, but we are seeing strong activity, very positive results going forward, or very positive mindsets going forward, and that we're well placed once we come out of lockdown and the pandemic dynamic to actually move ahead very, very positively. The message and what we've been discussing with our clients, both outbound and inbound, we believe we can now see that light coming the other way is the end of the tunnel, not an express train coming the wrong way. And with that in mind, knowing what our business plans are, what the client's business plans are, we've really got a plan for that, because as we all know, cash flow is king. Cash flow has been challenging in this environment for a whole host of reasons. In the SME space in particular, it's been exceptionally challenging. So to reinforce what Brendan has said earlier, once you're having a look at your plans, and to do that planning, then actually establish what your likely funding requirements are going to be with your funders, because that will hold you in very good stead. It is probably going to be a little bit, not too late, but you're going to have left it a little bit too late if you wait till we come out of that into the cleared areas in post-pandemic. Okay, so working capital and funding and so forth. But let me just go on to what I wanted to discuss today in part, which was the more relevant aspect, which is supply chain dynamics and so forth, and what we all understand about global supply chains, what it's meant traditionally and what it means going forward, because there has been a change there. So I know I'm going to state the obvious here, but I am going to just to mention it for the sake of starting the discussion, so to speak, that global supply chains, as you know, were created in order to deal with and keep manufacturing costs as low as possible, and to keep inventory costs as low as possible. So you didn't have to overinvest, have excess working capital tied up in stock, which wasn't very effective, because you want to maximize your stock turns if you're in a stock environment and so forth. And if you're not in a product related area, even on the service side, you've got various aspects of those service lines that you also have to manage in that particular fashion. But that traditional dynamic of supply chain is really moved a little bit. It's no longer really what it's all about. And so that traditional view, apart from being costly in one sense, really has morphed into more of a marketing, customer service type exercise, and we'll talk about that a little bit later on. And the outcome of that is to have positive outcomes for you as the business people, positive outcomes for the merchants that you're dealing with, other people you're dealing with, depending on what your specific business line is and where you fit in that supply chain. So it's to actually drive those efficiencies in a very real sort of sense. So what's the new reality? If we can change sorry, Brendan, let's go to the next slide. I should have told you to change one earlier. That's it, the new reality. And as to how it's going to work going forward, and what we have to rethink. So we know that the pandemic has actually been a significant catalyst and a significant disruptor that's brought this to the fore, and everyone is rethinking that. But it's not the only disruptor. It's not the only catalyst for change, and we'll discuss some more of them later on, but just to mention one of them is what I'll refer to as the Amazon effect, which you may or may not have heard before, but I'm sure you all understand what that means. And that Amazon effect has created a situation for all aspects of business, and whether it's from the supply provider's point of view all the way along the chain through to the customer, where everybody expects this seamless environment with virtually instant results. Okay, the pace is quite rapid. I'm sure we've all sort of experienced that in our businesses in terms of demands from people, those people we deal with up and down the line, and I'm sure most of you will have done that. And that's no more evident, or it's very clearly evident if you look at the e-commerce environment. That's very, very clear in terms of the technology that have been invoked to actually make sure that delivery line, that end-to-end solution is actually very, very enhanced. But it's not only in the e-commerce environment; it's across all industries. It's industry agnostic, business agnostic. That is the mindset of the business world today, and we must be able to adapt to that. And whether not, depending on the size of your business, technology can be expensive, but there are other ways of dealing with that in the first instance. Brendan, can I ask you to just click to the next one? So we talked a few moments ago about what those disruptors are. You can see them all there. It's not only the pandemic. the geopolitical one, which everyone's aware of, and all the things that that are up on the screen, which I won't read. But the imperative now is, therefore, with all those things happening around us, and they are all happening around us, is to make sure for our business success and our broader economic success is to have what we call supply chain resilience. We need to make sure that we can actually respond appropriately, deal with it in a manner that we're not running from pillar to post in a desperate situation trying to shore up the position in our respective areas. Whether it be local or whether it be overseas, that dynamic is the same. Brendan spoke about in his presentation in part about, there's a shortage of wood as one example. We know there's a shortage of semiconductors as another example. So people are doing all sorts of things to make sure that that type of supply chain resilience is there. And that sometimes means making significant changes to the supply chain. Okay. The first one on the screen there is geopolitics, the geopolitical environment. We can't have this discussion without talking about China. I'm not going to go into the political side of life, but no doubt, as we're all aware, that China is a growing concern, not only external to Australia, but also within Australia. And our clients globally and locally are actually taking steps to actually mitigate that risk, to minimize that risk. And there's a real trade-off there, because the trade-off can be cost in the short term. As you go to new markets, maybe China was a cheaper supply line, maybe it still is a cheaper supply line. Cheaper supply lines don't help you if you can't get supply. And if your competitors are going to other jurisdictions or to other suppliers and they can get supply, well, you're not going to be very comfortably placed. And that's across, across all industry groups. Most people have actually taken some action to go to look to revise their supply lines, and over time there will be a greater sense of that. I think what we're getting is that there's going to be greater acceptance of the real dynamic, which can impact upon cost and so forth. But what it does mean is that the way you manage your supply lines and so forth needs to be really very, very seriously considered, regardless of the size of your business. And I appreciate that smaller businesses do not have the resources that larger businesses have, but that doesn't mean there's nothing that can be done. Brendan, can we just shoot across to the next slide, please? So what I'm going to give you now is just some broad outlines. This is a helicopter approach. It obviously is, you've got to be looked at in the context of your specific business, the industry you're in, whether your goods, whether your services, and where you fit in that. But so these are some very general points, because today we don't have the time to go into specific examples in depth. But let's talk about proximity sourcing as a really good example of things that can be done. And I've quoted Zara there, and I know Zara is a sort of a very large organisation, but I use as an example of somebody who's moved very quickly, and their entire model is to structure their supply lines from end-to-end solution, from where they take the orders, where they do the manufacturing, where they deliver to the customer, in proximity to the respective parts of the market. Zara has done that exceptionally well. If no one's actually, I'm sure you've all heard of Zara. I'm sure some of you may have even looked at their overriding strategy. If you haven't, I suggest you look at it. It's very, very interesting reading, and you could probably take something from it. But proximity sourcing is very, very relevant. Whether you're in Australia or out of Australia, look at where your customers are, look at where your supply lines are, and see if you can adapt to that, because that can actually save significant cost and also limit timeframes to delivery and so forth. An important aspect here is also contingency plans for your suppliers. You should never assume that your suppliers are going to be untouched by these events that are going on around us. Just as you're being impacted by them, they can also and will also be impacted upon them. And you want to make sure that they are resilient enough, because you may have made all your plans. If something happens to them, you have a problem. So when it comes to your raw materials and the disruption as far as that's concerned, you have to get a sense of what your suppliers are doing. I'm not saying that's an easy thing. You speak to people, there are ways of interrogating that up to a point. The smaller you are, the harder it is. The bigger you are, you've got some more resources to throw at it, but it's definitely a very real risk issue that you need to deal with. As the extension of that is your supply going under. It's the same point. I don't need to labour it, but I'll leave it at that. What is a real concern when you've got problems with supply is quality control, because you don't want to have a situation where all of a sudden your suppliers, because they can't meet demand for that particular product, in actual fact put in substitute or substandard material. And that is a problem for all, for obvious reasons. There's regulatory issues that you may need to comply with when it comes to what you're doing. There might be, apart from your internal governance aspects, some very real, some very real health and safety issues. So these are things that you really need to turn your mind to in this climate of very rapidly changing dynamic, and it's nothing that you can take for granted. And I'll talk a little bit more about that shortly. The level of stock you need to hold is a foundation issue. You want to hold less than more, but you've got to temper that with the current environment and depending on what your supplier status happens to be. The obvious about the shipping and so forth, we know shipping has gone up tremendously in value. That's not necessarily a matter of the shippers taking full advantage, even though I wouldn't say that's outside the realms of possibility to a certain degree, but the reality of it is they're also, in their own business dynamic and so forth, things have changed, and that has driven a large part of those cost elements. The last part that I just wanted to mention, which I don't know how many of you have looked at, insurance. I'm not an insurance salesman, I'm not an insurance guy, but what we have seen and what we've discussed with our clients to make sure that the coverage for economic loss, as I've said there, arising from things like COVID or force majeure, because you've got, in the geopolitical situation, have a look at your policies, because many policies won't necessarily cover you in that regard, or they're a carve out. So please have a look at that. So as you can see, the issue for business is that when we start interrogating these issues, these issues tend to raise more questions than answers right at this very second. So who are who and where are the alternative supply lines? Do we need to change terms of our contracts with our suppliers, the terms of our contracts? How do you identify suppliers in distress? Implementing new technologies. What do you have to implement? Can you afford to implement? You need to do something. So what is that you need to do? And finding the right balance between cost efficiency and resilience. Because obviously the more you do, the more it is going to cost you, and there's always a trade-off. So that doesn't mean you should do nothing, because you need to be resilient, but obviously everyone's mindful of the fact that people have limitations to resources. So these are the things that need to be addressed. Just because it's difficult doesn't mean that it can't be addressed or that it shouldn't be addressed. Quite the reverse. Brendan, can I get you to just press go for me? Thank you. Okay, some of the other considerations, scale, which is business versus supplier leverage, and it depends on how big you are and who your suppliers are. If you're a very small fish in a very big pond, it's very hard for you to impact and to influence your supplier. So when you need stock, you're not necessarily in the first instance going to be first cab off the rank, or in your relationship with them, will you be given preferential status, so to speak. Now, many people everyone knows their suppliers broadly, but how well do they know them? Okay, and you need to be able to get a much deeper relationship with your suppliers, because that will help you in challenging times. So it's not only about being the biggest, it's also about having a relationship with them. Attend trade fairs. When the borders open up, you'll travel and go and see them, but in a very meaningful sort of way. Okay. Improving technology, I don't think I need to speak about. That's fairly self-evident. But once again, technology does very much form a part of it. Okay. The funding lines, Brendan has already spoken to that, and I've mentioned it earlier. Very important part. Funding is a primary issue for most businesses. I think it's there was a series of surveys done both locally and overseas, and the main thing that came out of that, the thing that kept people awake at night, was funding in the SME space. So the issue is to plan it and then have it well and truly in advance of the requirement wherever possible. So get the assistance of those people such as Brendan and others, Banjo and whoever your bankers happen to be, and quite often there might be more than one. So that is a key issue. And staffing is also an issue, because at some stage, and once again, depending on your scale and size, will determine up to a point sort of how you go about hiring people with what skill set and so forth, because it is a very, very real exercise. So you can still be in the SME space, in the M space in particular, which is quite a broad range. One of my clients who happens to be in that space has just now employed their second person in logistics because of the impact that the first person had, and that's actually paying dividends, so to speak. It's very, very relevant. Entering new markets in the is always a challenging exercise for any business, but I did a presentation a number of years back because we felt that a lot of Australian businesses weren't engaged internationally in the SME space as what they could. And there was a general view at that stage, I'm probably going back 10 years ago now, there was a general view that unless you sold a widget, you couldn't export anything. We are in many respects a service-based economy, not exclusively, but in many respects, you can export anything. I export my services. Okay, I've got many overseas clients. So the mindset has to change. Entering new markets is something that you need to do, not gingerly, but carefully. And there are some strategies there that you need to give consideration to. So it's a discussion itself. And if anybody just wants a bit of a chat with me, I'm happy to take that call. My details sort of are available if somebody just wants to understand what I mean by some of that stuff. I'm happy to do that as a courtesy because of you having attended the session today. But that is very much a reality, and it's a very interesting place, and you should be there. Everybody should be there. Mindful of the time, I've only probably got another minute or two, so can we just move across to the next slide, please? Okay. M&A activity. Okay. Once again, following on from some of Brendan's earlier commentary and the economic observations, the first point I'll make is that there's no shortage of money around the place. Okay, money is not the issue. Okay, doing the deal is a different discussion from having the money, right? There are plenty of investors out there who are trying to expand their marketplace, where they're going to do horizontal or vertical integration, whatever it happens to be. Okay. So what is the challenge? And over the past 12 to 18 months, probably 2 years now, getting on 2 years now, that activity has slowed down considerably in Australia. It is far from dead, right? But it is definitely slower, and that's for the obvious reason of pandemic primarily. And people like to, when they're buying business, especially in the cross-border space or even the interstate space, they like to kick the tires, understand what's going on, see the business, feel the business, speak to the people. That's been significantly retarded, or the ability to do that has been significantly retarded in this environment. So that's had a bit of a drag effect in this particular space. But there is a lot of interest, once again, from overseas as well as from Australia. What we do expect, and we have these discussions on a fairly regular basis, and I'm part of a corporate finance group that that deals with people from all over the world. We swap deal flow. Basically, we tell one another what we have, and everyone is expecting that once restrictions lift, that that deal flow will rapidly increase. In the Australian context, very much the case. That's the general sense of things. That has been the case in the overseas experience. Not that we automatically must follow that experience, but in many respects, we believe we shall. Many of the overseas markets, like America, the UK, even Europe, what we read on the paper about COVID numbers and all that sort of stuff, can I please park all that and put that to one side? On the business dynamic, people are doing business. Okay, it is very real doing business, and in those markets, they have come out of those restrictions considerably faster than us as a general proposition, and that is what the evidence is pointing to. From your point of view, you should also be looking to see where that opportunity lies. So if you do have the opportunity to deal with an acquisition, a sale, structuring yourself accordingly, even if it's for a 2 to 3 year time frame for a realization event or an acquisition event, well, you do need to start thinking about that in this very much new landscape, because funding is a key issue. Okay, healthy balance sheet and cheap capital. Well, obviously with poor balance sheet, it makes funding significantly harder in many respects. But if you've got respectable businesses and you've got strong cash flow, and you've got access in today's market to what I have referred to as cheap capital, that is very, that is a a great opportunity that presents itself, and not all lending has to be on the basis of what the traditional banks lend. And I don't need to sort of advertise Banjo here, but they have got unsecured lending in the traditional sense from what you're used to, and therefore that may provide some very, very real opportunities for you in a very much challenging environment as we move forward. Challenging but positive environment as we move forward. And investor funds, as I said earlier on, are available. So I'm going to stop it there at this stage, only because I want to allow some question time, and I've probably exceeded my 15 minutes by
No, you've done well. Well
so
done,
I know,
Rob. Thank
probably
you.
talking like an express train up to a point, but so I apologise for that. But yeah, there's a lot of ground to cover, and this is really the helicopter view.
Yeah, no, there's some wonderful insights there. Thank you, Rob, and thank you, Brendan. Some of the clearly there's a lot of challenges out there. Brendan touched on the labour, materials, border constraints challenges. Rob's talked about issues with shipping and insurance, but despite all of those challenges, there's plenty of opportunity out there. And perhaps if I can just ask Brendan, one of the questions we've received is with regard to where Banjo is focused on its growth. There was an interesting slide there. You talked about the various states of Australia as to the opportunities that present there. How is Banjo seeing things from an interstate and regional standpoint?
Yeah, no, good question. It's an interesting one. I think we probably saw last year with the Victorian lockdowns a bit of a larger impact in terms of clients coming to us and needing to defer payments and those types of things. A lot of those businesses have come through now and are doing well again. And to a couple of points I made earlier, I think a lot of businesses have evolved and doing things differently to access new markets and to continue to trade well. Even I think of businesses in the gym sector, for example. We've got one client who started selling prepackaged foods and things like that online, and they were also renting out all of their equipment that they had in their gyms. So things like that enabled them to adapt and to continue doing well. So I think flowing on to 2021, we probably haven't seen as big a impact with the lockdowns to our existing clients, and especially in New South Wales. It seems like things have continued to, a lot of businesses have sort of continued to trade in the background. Again, they've adapted, they've thought about things and I guess implemented strategies that have enabled them to continue to operate. So I think we've probably seen that in the insolvency space as well, and like there hasn't been many business failures. I think that the government obviously made some changes there to make that happen, but it's been a good environment, and I think a lot of businesses have been relatively well supported with some of the other government initiatives too, like I mentioned. So the JobKeeper program and the cash flow boost have given them that sort of in that arm, I suppose, pardon the pun at the moment, that they needed. So yeah, that's kind of how we've been seeing things.
Good. And Rob, a question for you in regard to supply chain management. We hear a lot about transparency in supply chain management, and I guess I'll be interested to hear your thoughts in terms of what's really relevant for the SME sector and how hard it is, and it's quite costly too, right? Interested in your thoughts around that.
Yeah, I mean, and that's a really, really great sort of question, and it probably deserves a few hours on its own. But the elevator sort of comments there is that the transparency aspect is not only relevant to larger business, it actually is relevant to all manufacturers, to all aspects of business for a number of reasons. Firstly, customers want to have that transparency. They can see from beginning to end where it is, when they're getting it, how things are tracking and so forth, and that's just at a very basic level. That's the expectation that I spoke about earlier on, where there is a greater expectation of immediacy and so forth. So customers and business want to see that. When you order something from DHL, you get the tracking thing. You can see where it is in the world, and it's all over the place. People expect that. So that's one aspect of transparency. But there are considerable other aspects of transparency that that business needs to be aware of in today's environment. Not only from an ethical investment and business point of view. We've all read about it in the press over the last number of years. Slave labour, is one example. For human rights abuses, things of that nature. People want the transparency to make sure that they're not supporting products that are actually engaged in those inappropriate practices. And the list goes on and on as to what those inappropriate practices are. So when you then look at different jurisdictions, and we've got similar here, but let's take it broader than that. You've got the UK, you've got the US. Apart from Australia, there's specific acts have been brought to the fore to make sure that things like that cannot happen. So without transparency, how do you protect yourself when someone makes a claim to say that something has not been done appropriately? Okay, you need as a director to put yourself in a position where you can answer all those questions today, because if you can't, there's a very, very bad look, and it's a very costly exercise afterwards to then go around with a mop to say, oh, this is what we've done, this is what we haven't done, and how we've done it. So the transparency is very much part of a risk mitigation strategy. I'll try and bring it down to a more common denominator that from a small business point of view. Okay, if let's say you're an importer of lettuce. Just, I don't know, pick a food product, it doesn't really matter, a fresh food product, doesn't really matter, okay? And all of a sudden, by the time it gets to market, someone eats that particular product and it's proven to have something in it, E. coli, whatever the particular problem happens to be. Whose problem was it? Yours for not refrigerating it, the shippers for not refrigerating it, the suppliers for not having done the right thing. The main thing is, was it your fault, right? And hopefully it hasn't been your fault. But the problem is you need to be able to demonstrate that. You can't necessarily just simply say, oh, it's not my fault. Right? So the transparency, the situation of transparency in certain areas is forced upon you. So this is not simply a matter of big business, it's their problem, I haven't got the money, see you later. It's not going to help you when you're in court as a director with a problem when something's happened. There was problems with children's paints out of China for using lead. Whose problem was it? Let the lawyers argue, but who wants to be in the game? So,
made even more challenging with social media too, right?
Yeah, there's all sorts of reasons why transparency is very much required, which is my point is that you've got regulation which dictates it, but you've got beyond regulation, which is directors' obligations and responsibilities and risk mitigation for the business.
Yep.
That gives you
we talked about the surplus of capital that's available. I guess Brendan, question for you in terms of Banjo's propensity to lend. It seems as though there's a lot of sectors that Banjo is covering. There's not too many that Banjo don't cover. But in terms of specific focus going forward, what's the view on Banjo's risk appetite there?
Yeah, well, I guess answering that in terms of where we're seeing opportunity at the moment, David, I think from a sector perspective, anything food and grocery related has been performing well. We've seen a lot of clients in the food production space, whether that's fruit growers and exporting, but right across the supply chain. So to your wholesalers, to your distributors and your retailers, notwithstanding some of the impacts that they've got at the moment in terms of accessing stock. But so food and grocery has been a big one. The construction sector has continued to trade, and things like house prices and government spending in infrastructure is providing some pretty good headwinds there in construction sector, so we're seeing a lot of good businesses there that are requiring capital to fund their new projects. The manufacturing space too, we're quite a bit in the metal and steel manufacturing fabrication space. So, and yeah, a lot of those businesses are doing well and obviously supplying into some of the larger infrastructure projects and things that are going on at the moment. So probably three sectors that we're seeing quite a bit of.
Yeah, great. Well, so there've been some interesting insights, some wonderful opportunities. I get a genuine sense, not only from my involvement with Banjo, but listening to Rob's comments about not waiting for the reopening, to be taking full advantage and preparing yourself for when we do reopen. We can look forward to those opportunities. I guess the last point that I'd be really keen to convey is our thanks to all of those businesses out there that have been supporting the Banjo growth story, and equally Hall Chadwick's clients as well. Thank you for dialing into today's presentation. Brendan and Robert, really appreciate your thoughts, your insights, and once again, thank you to everyone who has dialed in today. We really appreciate your interest in your custom, and look forward to speaking with you very, very soon in the near future.
Thank you very much.
Thanks, David. Thanks, Robert, and thanks everyone for attending.
And if anyone does have questions, more than happy to field them at a later point in time.
Thanks, Robert. Thanks, Brendan.